Good afternoon, Southern California. I'm John Baldwin with John Hart Real Estate, and today is March 11th, 2022. So have an interesting topic for today. What I want to talk to you about is what's going on with the Federal Reserve. And we haven't even gotten to the Fed meeting that's still about a week out. So it is anticipated that the Federal Reserve is going to start increasing rates. We don't have a rate increase yet, but most of the time, lenders like to front load what they think is going to happen at the Fed meeting. So, we think that a lot of that has already been factored into the current rates. But what is new is what I want to talk to you about today, and that is a video that's up on CNBC.com right now, their Squawk Box section. Fed to announce final purchase of mortgage-backed securities. So what the Federal Reserve has been doing over the last 2 years, in order to stabilize the economy and the housing market specifically, is they have been buying 120 to 150 billion, that's billion with a B, dollars worth of mortgage-backed securities every month. I think in total they said $1.3 trillion worth of mortgage-backed securities, and then they also increased the overall balance sheet of the Fed by another 3.3 trillion in Federal Reserve notes. So basically just printing cash, and they've expanded the balance sheet to almost $9 trillion. And by the end of this program, we're probably going to be fully at $9 trillion. But right now, I think it sits at 8.8 trillion. So we're not that far off. But what they're going to do is they're going to stop expanding the balance sheet right now. So as paper matures and gets off their books, they're going to still buy to maintain the current size of the balance sheet, the current level that it is. And then they've also announced, and this is in the video, that they're potentially going to start tapering and reducing the size of the balance sheet this summer. Now, this is going to impact the market, and it's going to impact mortgage rates. And so we don't even know what they're going to do with the rate, interbank rate, the Fed funds rate. That meeting is next week. So fingers crossed. I'm hoping that rates don't rise too much and that they've already factored in most of what we're seeing happening with the Fed right now. But this is something to be aware of because the cost of waiting is real. You need to get off the sidelines because, you go back a couple weeks and check out the video I did on what the real cost of waiting to buy your dream house is. Because the analysis I did was the difference between $1 million purchase or a $950,000 purchase, but the difference being a 1% increase in mortgage rate. So let's say you get the $50,000 lower purchase price, but your mortgage rate is higher. You're going to be paying more every month for that property. Plus, the total amount of interest you pay through time is going to be significantly more. So you're going to end up paying a lot more for the same house, even if you have a better front end nominal purchase price. And that's where it's my job as your agent to get you in now, and because it's all about the interest rate. The long-term play here is getting the best interest rate you can through time, because that's going to save you more money than, as I said, a nominal difference in purchase price. So give me a call, 213-973-3777, and I'll get you in touch with one of my lenders and get you, moving on that. And then I also want to touch on a video that is actually from a year ago. And what it is this is Jerome Powell, the chairman of the Federal Reserve, speaking. This is April 28th, 2021. So almost a full year ago, 11 months or so. Federal Reserve Chairman Jerome Powell takes questions from reporters about their decision. This was a year ago, remember, to leave the interest rate unchanged. But what they talk about in this video and some of the fundamentals they discuss is who are getting mortgages over the last decade. And we don't have the subprime debacle just waiting, because everybody who's gotten a mortgage pretty much over the last 10, 12 years has had money, income, and credit to sustain it. So we don't have those toxic mortgages waiting to blow up the market, and we're not going to be going off a cliff. So the fundamentals of this market are very, very different than what they were in '09. So I am not foreseeing a big market crash. I do not see anything like that because we don't have a big, scary underpinning to the market that is bad fundamentals. So, I mean, we're looking at super tight inventories right now. And even with interest rate rising, we have a ton of buyers trying to get into the market and lock in a low interest rate now. Because even at right around 4%, that is historically still toward the bottom of the range and still a darn good interest rate. So let's get you into your dream house. You need to give me a call and I'll get you in touch with one of my fantastic lenders, 213-973-3777. And let's get your house sold.